Well, 2016 is going to be an interesting time. It looks like all the fundamentals are in position to continue the good times. There are probably 2 or 3 years to buy properties, to complete developments, and to get transactions underway. But this is a window. This won't go on forever. It's a great time to be executing.
I think the key with 2016 is you look at a situation where the fundamentals are extremely strong, albeit growth will slow. So I think it's hope for the best, but start preparing a little bit for the downturn. What we're seeing is, from a hotel buyer perspective, people who are buying today may not be as aggressive in their cash flow forecast, and also maybe putting lower leverage on the assets they're acquiring, and just being a little bit more conservative in their purchases because they're not sure of the future.
So 2016 is going to be, I think, an interesting year. There's a lot of uncertainty right now. I think that people should be looking at their assets from a long-term perspective in 2016. I think that if we see a slowdown in demand, either in 16 or after, it's a good time to start to plan to make sure you're taking care of your assets. It's a good time to do renovations, and so that when we are in a period of compression and lack of supply, you're going to be fully prepared to take advantage of that.
One of the biggest things is to keep track of where GDP is heading. So the estimates of GDP growth have been lowered over time, and if that continues, owners will want to take a more defensive position as it comes to the hotel industry. So that represents not being more aggressive about your budgeting, about your purchase expectations, and so forth. But if GDP continues to grow, then we'll look at continued improvement in the fundamentals for the hotel sector.
Well, I think a lot of people probably started preparing in the fall, especially on the hotel side, getting their budgets together. And I suspect people are thinking already they've got to prepare to deal with reforecasting. Since certain markets, travel is going to be off. Obviously, the stock market has had an impact on people's thinking. I spent 2 days polling investor groups a couple of weeks ago and was fascinated by half of them are pulling away for the moment, going on the sidelines in addition to the public REITs. So I think people just have to be cautious and sort of do their reforecasts as they normally do, but really pay attention to them. Operating results seem to be staying good, but you've got to wonder a little bit with all the economic turmoil.
The primary impact has really been you've lost a whole segment of hotel buyers for a lot of the first-class full-service hotels. So you're really looking at a situation where the public companies, especially the public REITs, have stopped buying hotels or slowed down significantly. So that has impacted the market by decreasing the number or the pool of buyers for those type of assets.
Well, varied. We're public. We're theaters and hotels both, and restaurants, and so our stock's a little off, but not as heavily as some of the public hotel REITs have been hit. In terms of our business, the only place we've seen an absolute reaction in the hotels, it's actually not so much stock market, but the oil markets. So we've been hurt a little bit in Oklahoma City, a little bit in Houston, whereas California, Georgia, Midwest, they're all staying up so far.
I think it's making people very nervous on what at least the immediate future holds. It certainly has affected the hotel public companies, and although this started before January, we're seeing a lack of investment by the REITs into the markets. So myself as a private company owner, we believe we'll see some potential buying opportunities as a segment, a very historically aggressive segment of the market is not at the table today. So time will tell. If the fluctuations in the stock market are affecting corporate profits, I think that's the longer term or the more medium to longer term impact on what's happening and how that affects business travel. And certainly we think we're going to see some potential leisure travel impact as well.
We haven't seen a direct impact, largely because our clients are already in the middle of transactions. They're not going to stop because of the stock market. Our clients and friends, I think, like many business people, worry about what the implications are, and whether that could reflect trouble for the economy. If there's trouble for the economy, there's going to be trouble for the hotel industry.
Sure, the impact has been pretty significant because with the concerns that the GDP may be leveling off or slightly decreasing, there is a widespread concern among lodging analysts that the industry will be close to peaking. In that kind of environment, the hotel companies are rewarding asset-light models and penalizing hotel companies that are holding assets. So you're seeing companies like Hilton announce that they may spin off their owned assets into a REIT, and I think you'll see a lot more emphasis on those kind of moves going forward in 2016.